Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, November 2nd, and then see how things look for Thursday, November 3rd. And this whole positive scenario, things looking better, you can pretty much cross that off for right now anyway. Now, we could still recover. Maybe the market's overreacted in Wednesday's session, but they just did not like what they heard. I did do a full-length video, so if you want to see more charts and more analysis and commentary, please feel free to watch that video. But let's go back and talk about what happened. Right at the open, we did have a lower open down to S1 at 38.29. And then things, they chopped around a little bit, but it was pretty subdued because everybody was waiting for the FOMC announcement. Then after the announcement came out, at first prices shot higher. Then we started to go much lower after that. And that was during the press conference. The markets did not like what Chairperson Powell said. We ended up closing at the low. We were down 2.5% on above average volume. Our technicals, they're turning more negative now. A lot of the positive backdrop, even though we had Monday and Tuesday as down days, they were holding up. After Wednesday's decidedly down day, that's kind of taken a lot of the positive air out of what had been looking better. We may be getting some more Fed speak to kind of either clarify or reinforce what was already said, especially from Chairperson Powell. There's another one that I've added here. We have Iran, Saudi Arabia. There's some rumbling now that Iran may attack Saudi Arabia. A lot of things going on there, may have an impact specifically on oil prices, but that may have an influence on the U.S. stock market as well. If that ends up happening, is the U.S., will they intervene? That's another thing. If that even ends up happening, sometimes Iran talks an awful lot and then it doesn't necessarily follow through, but just about that time is when something really does end up happening. So what are some comments? After the announcement, stocks initially went up, but then as the press conference unfolded, they really went down, and he said this statement: "It is very premature to be thinking about pausing." That flies in the face of that Wall Street Journal article that looked like things were going to be pausing in December, or at least slowing down. Not pausing, but slowing down. And then he said, there is more ground to cover. The markets did not like that, and that's pretty much what took everything lower. The VIX barely moved, which is really strange. We still continue to be oversold with that. The Dow lost its 200-day simple moving average. That was looking a lot more positive. Some of the support, you have to go to the long, full-length video to watch this. Some support was broken, while there's still other support that's still holding up. Interest rates, for the most part, went up. And then this whole scenario that they might lessen the increase in December, that's pretty much been decimated for the time being. Now, there could be some backtracking. There could be some clarification that brings that back in. But as of Wednesday's session, not really looking like it. We still have all of our different yield curves that are inverted, which is suggesting economic weakness going forward. Sentiment with the decline has switched back to neutral. And then we had the MBA mortgage applications index, which was down 0.5%. The last time we got this report, it was down 1.7%. The ADP employment change, that was a lot higher than expected. They expected it to be at 198,000 jobs. It came in at 239,000. And that's giving rise to this scenario that, look, man, the economy might be falling apart, but anybody who wants a job can have a job. And there's even more jobs available than people to fill them. So why should we stop raising interest rates? Man. The ADX has switched back to negative. The red line crossed below the green line, and we're just barely above 20. If we calculate this again, we might end up falling below 20 after Thursday's session. And then naturally, I had to switch our bias to negative, and I'm keeping our momentum at mixed with a negative slant. We could still go down more from here, but we kind of overdid it in Wednesday's session. But did the market overreact? Will we get some kind of a bounce from that? But we can't really count on that necessarily, but it's something that might happen. And then looking at our crazy World Series indicator, which really predicts nothing, just mere coincidence. The series is tied right now at 2 games apiece. So what's our outlook then? The technicals are turning back negative. We have jobless claims, trade balance, the preliminary third quarter for productivity and unit labor costs coming out, factory orders, and then a big one will be the ISM non-manufacturing index. We had the manufacturing index earlier in the week. Then the whole list of geopolitical events, where I've added Iran and Saudi Arabia to that list. It may turn into nothing. It may turn into something really big. We just don't really know right now. And of course, we've got the midterm election coming up next week. So our scenarios, for the time being, I'm kind of going with both, because it was really hoping that things would have gotten decided in Wednesday's session. The only thing that we know that we're not right now is sideways, but that could change after Thursday's session, because we were looking better and better and better. And then we have this massive down day. Is the market going to try to recover from that? Or is this the beginning of prices going even lower than they already have? And for right now, we're still barely above 20 with our ADX, and it has switched over to being negative. So our conclusion, S&P turning back negative, short-term negative, intermediate term more negative, long-term, a lot of the improvements that we're seeing, they're not really happening now. And we're still below the 200-day simple moving average. So thank you. Please check out the full-length video if you feel that will help you, and I'll evaluate things after Thursday's session, and I'll at least do a brief video for Friday. And if we do see some real changes in our charts, then I'll do a full-length video as well.